You know, there is an old saying that a week is a long time in politics, and it turns out that a week is a long time in economics. Welcome to the bottom line, where we are going to find out about the impact of the problems in the Middle East and what this could be on the economic side. And joining us today from Corion Capital, David Bacher. David, welcome back. Good to speak to you again.
Thanks, Mark.
Yeah, I'm doing a guest host here. Rafiwe is busy doing her work at ENCA. She'll be back on the next episode, but we thought that we've got to hear from David because, David, you were about to launch into a whole explainer about how well South Africa is doing. But along comes President Donald Trump, and he decides to do a bit of preemptive cleaning of house and bombing of Iran, and it's got some serious impacts for the market. Explain to us what the impact is on the market.
Mark, the tensions in the Middle East has certainly introduced some short-term volatility into the markets. In fact, yesterday our market fell about 5.5% in a single day. That's the sharpest daily move since COVID. And I looked at our records. I think it's the 16th worst day since 1995. So that was a dramatic move. But, as I always say at Corion, we always emphasize the importance of taking a long-term perspective. And market volatility is often the price investors pay for longer and stronger returns. Certainly, if you look through the short-term noise. So, as you said, it's important to think about where we've come from. South African markets have actually been on an exceptional run. February actually marked the 12th consecutive positive monthly return for equities, which is quite remarkable. And if you look at our numbers in the South African markets from a 1, 3, and 5 years perspective, South Africa has completely outperformed global equities. And I think in a 5-year period, we've annualized 18% per year. So while the recent volatility makes us all feel very uncomfortable, it has been on the backdrop of what has been a very, very strong period for South African investors.
Now, David, students of the market and maybe some people that have been on this earth for too long will recall a really sort of serious oil shock that happened in the early 70s. That was in the aftermath of the Yom Kippur War in 1973 when OPEC decided to withhold oil. It had a massive impact on oil. It had a massive impact on the price of oil, on inflation and interest rates. Explain to us what that impact is and whether we're there again.
Yeah, I mean, despite a concerted and deliberate effort to pivot away from fossil fuels, the world remains at the mercy of a tiny stretch of water in the Persian Gulf. The Strait of Hormuz is the most important energy choke points in the world. I think roughly a fifth of the world's oil supply comes through that narrow shipping lane every day. So, if the straits were seriously disruptive, oil prices could spike significantly more from where they are, which would have a ripple effect on global fuel costs, transport prices, and inflation. I think it is a material event in the market. How do I compare it to the 1970s? I think it is slightly different. The world is slightly less dependent on fossil fuels, although it's still a material part of our energy supply. I think interest rates there were much lower, and inflation wasn't as low as it is at the moment. So, I think we are far away from comparing it to the 1970s, but the market is anxious, and it is something that really has ripple effects across the world.
And of course, one of the massive differences between then and now has been the fact that the US is now largely independent of other states on their oil supplies. So their economy might get out of this without the same damage. But South Africa is definitely caught in the crosshairs of this all because we definitely are very dependent on that region. What is the impact for South Africa?
Yeah, South Africa is very exposed. We import the vast majority of our crude oil and refined oil, which means a global oil price shock feeds relatively quickly into our economy. I think the biggest worry is always inflation and how it impacts consumers. So, petrol in itself makes up around, I think, 4% of our inflation basket directly, which might sound quite small, but the real impact is much larger because fuel costs affect transport, logistics, food prices across the economy. So, I think economists really think like the knock-on effects is about 8 to 12% of the inflation basket. So when oil prices rise globally, it doesn't just affect the petrol pump, but it affects South Africans in a meaningful way directly. And then there's obviously the knock-on impact on potentially what happens on interest rates.
Then, David, there's also the geopolitical stress. South Africa, is in quite an awkward position. How does this impact things like our currency? Isn't it sort of around, the whole geopolitics of this all? How exposed are we?
Geopolitical stress tends to weaken emerging market currencies, which obviously we are, and the rand is one of them, because investors become more cautious and move money into what they foresee as safe haven assets, particularly the dollar, the US government bonds, and gold. So emerging markets like South Africa are generally viewed as a higher risk destination. So when uncertainty rises globally, investors often pull out the capital of these markets, which puts downward pressure on currencies like the rand. So, another important point is the rand is one of the most liquid and emerging market currencies in the world because it's very actively traded and liquid, it's a proxy for broader market risk. So the rand actually often leads a risk-off situation, which certainly happened yesterday. So, our rand and emerging market currencies are highly correlated to global market volatility.
What does the Reserve Bank do? Is there any tools in the toolbox of the Reserve Bank Governor Kganyago to do anything about this imminent threat?
So, we've got a very hawkish Reserve Bank governor, and he's really suppressed inflation. I think it's about 3.4% at the moment. Ideally, he would want to be at about the 3% level. Fortunately, we're not coming from a base that inflation is already high. So we're starting with quite a lot more reserves, excuse the pun, in his toolkit. But certainly, any inflationary concern or potential shock will impact the decisions of interest rates going forward. So the market has already started to temper down its expectations of further interest rate cuts, certainly over the immediate term.
Now, David, with just about every situation, there are winners and losers. In some cases, there's more winners than losers. In some cases, there's more, the other way around. In this case, there will be some areas that benefit from this kind of uncertainty. What could you view as potential winners and losers?
So I think from that perspective, we're actually quite blessed in South Africa because our market has a mix of what is perceived as more safer assets. So, obviously the beneficiaries of market shocks are generally gold and precious metals, which, that makes up about 35% of our market. So we do have safe haven assets, and those are the kind of assets that generally run, but not always. So, you've got competing forces at the same time. When the dollar rallies, generally that's also not an ideal environment for precious metals because of the cost of holding that asset, and the funding becomes relatively less attractive. So, there's no hard and fast rules in investing. We always are learning. But on the balance of probabilities, and you look back at history, we've got enough levers in our market to protect against a potential sell-off or in global markets.
David, strategy, investment strategy, portfolio strategy. What are you looking at times like this?
The most important thing is to stay disciplined and have a well-diversified portfolio. As I always say, at Corion, we're valuation-driven, and we try to ignore the short-term news and headlines and think a lot further down the line. And if you were thinking a week ago that South African interest rate shares or South African Inc. companies were attractive a week ago, and now they're 5-6% cheaper. Well, to us, that could present a big opportunity. So, at Corion, we like to be quite agile, and we take this volatility and market disruptions as a potential opportunity to pivot our portfolio, which we certainly have been doing in the last couple of days.
And tactical opportunities. Anything that stands out specifically?
I think, as I said earlier, our bond yields, although they sold off yesterday and a bit on Friday, compared to 2024, they are substantially lower, like 250 basis points lower. We've got a lot of green shoots in the economy. Our growth rate, while not high, is considerably more than it was. Our GNU seems to be working better than it was. Our deficit and our budget numbers are looking better. So, in that background, we still favor a lot of shares, and we still not running for the hills due to what's happened. Whilst it's been a very material and significant event, we're not running to the hills, and we're actually investing where we were a week ago, given that backdrop.
David, just now moving away directly from investments, but with an eye on industry, markets, etc. Times of disruption can lead to innovation. I mean, sadly, some of the most innovative inventions happen in time of war and things like that. So, people tend to do stuff. I referenced the early 1970s. One of the upshots of that era was that it saw the end of the big American cars and more towards the small Japanese cars because they were more fuel efficient. That was the response then. We have seen a easing of the whole sort of green energy argument. Do you think this will put the wind in the sails again, this time for more economic purposes, for people to start considering, alternatives to fossil fuels?
I think when any supply chain gets disruptive, the market will move quickly. So I think the short answer to that is possibly yes. But I think there's enough momentum and infrastructure that's been invested in those projects already. Those projects take tens of years or maybe 5 to 10 years to actually, from start inception to actually production of new energy. So I don't think it'll be an immediate response because of the lag time and the planning, but I think the world has moved considerably that way anyway. And maybe this will take longer term implications to moving further. But your point about innovation changing and things happening quickly, I mean, we haven't even discussed, because what's happening in terms of innovation is what happened to software shares in America last month, given the new ability of AI to do coding. I mean, some parts of the market were down 50% in America, given innovation. The world is moving very, very quickly. And, it's no time like now to be, diversified, not have all your eggs in one basket, because there are risks out there.
Yeah, and if all that money that has been sort of pointed at Silicon Valley and, is suddenly starting to look for other homes, South Africa could become an alternative where we've got some industry and some companies that could do with that kind of investment.
Amazing how times have changed. 5 years ago, no one wanted to invest in South Africa. Everyone was saying South Africa was uninvestable. And while we have a lot of challenges, and we continue to have a lot of challenges, if your valuations are correct and you start moving the ship in a better direction, things can turn quickly, and certainly they have in South Africa.
Add to that a big domestic market that is yet to be served properly, not with government grants, but with jobs, with real money in people's pockets. You could see a great demand for a whole lot of goods and services, and it could make South Africa an even more attractive investment opportunity. David Bacher, Corion Capital, thank you so much for sharing your insights today. And thank you for being our partners on the bottom line. It really is appreciated. The platform is growing. To everybody that joined us today, please leave your comments below. Tell us what you think about the current situation. There's no real appetite for a long military engagement. So one hopes that this is just a short, sharp situation and the market adjusts quite soon thereafter. And I'm sure that David and his team will be ready to benefit from that. If you want to know more about Corion Capital, visit their website, corion.co.za. That's Corion. And get in touch with them. It's good time to have professional management on your side. David Bacher, thank you so much for joining us today.
Thank you, Mark.